Hey everyone, I'm David Finz, and on this episode of the Cyber Insurance Imperative, we're going to talk about a recent court ruling that has dealt another blow to so-called silent cyber coverage. In the case of the Home Depot versus Steadfast Insurance Company, a federal judge has ruled against the big box retailer in a lawsuit arising out of a data breach involving stolen payment card information, concluding that an exclusion for the theft of electronic data serves to bar coverage under the retailer's commercial general liability policies. The data breach impacted millions of customers, which led the issuing banks to sue the retailer for the cost of replacing the cards, alleging that the retailer was negligent in its data security. Now, Home Depot's general liability carriers denied coverage under the electronic data exclusion, and the retailer was left to defend and settle the litigation out of pocket. Home Depot then filed suit against its casualty insurers, claiming that they had wrongly denied coverage, breaching their duties to defend and indemnify the retailer. Now, Home Depot acknowledged that the policies at issue didn't cover the loss of use of electronic data associated with the payment cards, but argued that the physical card numbers were still covered. The court disagreed, granting the insurer's motion to dismiss the case. The court did so even while finding that there had been a loss of use of tangible property in terms of the physical cards having to be canceled by the banks who had issued them. The judge reasoned that the loss of use was intertwined with and resulted from the compromise of the electronic card numbers, thus triggering the electronic data exclusion. So why does this case matter? Well, it bears noting that Home Depot was able to recover from its cyber insurers for other losses related to the breach, but the limits of the cyber program were apparently insufficient to also cover the costs of litigation with the financial institutions that had issued the customers' payment cards. Now, this case should serve as a cautionary tale that reliance upon property and casualty policies to cover losses arising from a cyber incident is misplaced. A dedicated and broadly worded cyber insurance program with sufficient limits for the foreseeable exposure is the best solution for managing this challenging and constantly evolving risk. Of course, many folks won't read past the headlines and will come away from this case thinking that cyber insurance doesn't pay claims, when in reality, that's precisely the type of insurance coverage that businesses need to address this exposure. And if your broker isn't educating you about these coverages, maybe it's time that you discover the more rewarding way to manage risk. So DM me on LinkedIn or email me at david.finz@alliant.com, and I'll be happy to send you a copy of the most recent edition of our Executive Liability Insights newsletter to help keep you informed of the latest developments, not just around cyber, but across all specialty lines of coverage. Thanks for watching.